Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you on this, the 25th day of October, 2016. I'm really happy to be here today again, and I want to remind you, as I do every week, that I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and my partner Chen Lin publishes a newsletter called What is Chen Buying, What is Chen Selling? You can go to miningstocks.com, miningstocks.com to learn more about what Chen and I do, and also to sign up for both of those newsletters. I do want to thank our sponsors for making this show economically viable. Our sponsors for today's show are New Legacy Gold Corp, Novo Resources, Klondike Gold, Auryn Resources, and Ariane Phosphate. Well, I'm really pleased that three of those sponsors that I just named, Novo Resources, Auryn Resources, and Klondike Gold, will be with me at the Metals Investor Forum to be held at the Rosewood, Georgia Hotel in downtown Vancouver. That's on the Saturday, November 12th and Sunday, November 13th. Now, Novo and Auryn are my number one and number two personal holdings in my retirement account, and Klondike is also one of my favorites there as well, because I think that company definitely has a shot at discovering the mother lode for the massive placer gold that's been mined over decades in the great Klondike region in Yukon. So I think actually we're going to have Peter Talman, who is the president of Klondike, is going to be on the show next week to update us. And the company should have some really, we'll see what the drill results are like, but I'm expecting they should be pretty good. And Peter will explain why they're important and what that is telling, what those drill results are telling them with respect to their search for the mother lode in the great Klondike gold region. But getting back to the Metals Investor Forum, in addition to Auryn, Klondike, and Novo Resources, other companies that I invited and which I own and recommend in my newsletter that will be at the conference are Latin American Minerals, Ascot Resources, Golden Predator Mining Corp., and PPX Mining. And all told, there are going to be something like 30 companies there. You know, what makes this forum, I think, special and makes it the best mining show that I've attended and have been a part of, and believe me, over the last 30 years, I've been a part of many mining shows, it's the fact that the newsletter writers who are part of this are newsletter writers that write specifically for their paid subscribers. In other words, we're not paid hired guns to promote companies. So there is an objectivity there, I think, that Eric Coffin, Joe Masmander, John Kaiser, Jordan Roy Byrne, Gwen Preston, and myself bring into the forum that are important. I mean, if you're getting paid a lot of money to say nice things about people, you'll probably say them. If you're independent, it probably carries more weight. So that's one of the things that makes this conference, I think, very positive and very useful to investors. The companies have to be invited. Companies can't just show up there with a big check and say, "Let me in the door." No, they have to be invited by the newsletter writers. And then I also think that the attendees at these shows generally they are the subscribers to the newsletter writers and people connected to the newsletter writers, such as people listening to this show, people that have an interest in the mining sector and know something about it. That also helps to improve the forum, I think, and make it the best forum that I've ever been a part of. And Eric Coffin is really a co-founder of that, and he's been on this show, as well as Scott Gibson, and they've just done a remarkable job. So I hope that you will be able to attend if you're anywhere near the Vancouver downtown area on the 12th and 13th of November. Go to miningstocks.com or J. Taylor Media, Mining Stocks or J. Taylor Media. Just click on the banner that's there, the Metals Investor Forum banner. Put your name and email in there, and you will secure a place. The space is limited, so it's important that you pre-sign, that you sign up for this show before you go there, so you're sure that you'll get in the door. Just like to mention, I guess we should just move on. We have very limited time, so let's move on to today's show. I've titled it "Harvesting Profits from This Secular Gold Bull Market." Michael Oliver, John Rubino, Rick Rule, all return guests are with us today. Michael Oliver will be with me just momentarily, and I want to see how much time we might have yet as we sort of move sideways in this gold market. How much time might we have before the next run in the bull market starts? John Rubino will be with me a little later to provide his outlook on the gold markets, financial markets, and specifically some of the things that Jim Rickards is talking about. The reason why he believes the dollar is heading down and in the very near future. So I'm going to see what John Rubino's thoughts are with respect to Rickards' thesis. And then Rick Rule of Sprott U.S. Holdings will be with me in the last segment of today's show to talk about the company Sprott Inc. It is a very important company, one that I've recently added to my newsletter, one I've invested in. It's a remarkable company that's done extremely well in bull markets, gold bull markets in the past, and they have tons of cash, no debt, and they're paying a 5.5% dividend while you wait for the next major move. So this is one I've become very, very impressed with, and Rick Rule will talk about that as well during the final segment. Well, in the meantime, we are very fortunate to have Michael Oliver with us, and thanks for joining me again, Michael.
I'm glad to be back, Jay.
Michael, in your weekend missive, you said, we suggest gold bulls restrain their price chart fears and pause to take in the larger positive vista. Now, your momentum chart illustrated in the pictures that is in your newsletter, your remarkable newsletter, it really, told the story very well, I think. But can you put in words, perhaps, for our listeners, what you were saying in your both price charts and momentum charts that you sent out to your subscribers this past weekend?
Well, most people think of technical analysis as price chart analysis, and that is the orthodoxy. We don't do it that way. We look at price charts, we have respect for them, but usually at significant turns, tops, bottoms, pullback points, corrections, and so forth, momentum gives you a far better definition of where the support is, where resistance is, where breakouts are, and earlier than does the price chart. Usually a price chart will break out, 5 or 10% higher from a low or 5 or 10% lower off of a high before you can realize it's turned than does a momentum chart. So our emphasis is on momentum, and it's kind of hard to explain in words, but we plot them like a price chart. It's bars plotted on a graph, but the bars are plotted in relation to a mean, a long-term average, for example, a 3-year average, a 3-quarter average. And you get a different vista when you look at the momentum chart than you do when you look at the price chart. Therefore, when the break started, 3 weeks ago when the break was nearing its end, down near 1240 on gold spot, I could look at the long-term momentum charts that had been broken out above back in February, way before price ever indicated it was breaking out to the upside, probably $100 before price became evident that it was turned up. We've returned to those breakout levels on momentum. And sure enough, what we prescribed week by week since that low 3 weeks ago was that what needed to happen was a gelling process, not some sharp turnaround. It was unlikely we would see that. Sure enough, that's not what we've seen. We've seen a gelling process, a slight firming, and now suddenly we're 3% off the low. We traded at 77 today with the low at $37 off the low 3 weeks ago. No big deal, but it's the way that it looked like it needed to turn, and it turns. The turning action occurred in an area on momentum that made sense. In other words, if you looked at the momentum chart and we're a price chart, you'd say, oh, that makes sense where it stopped. On a price chart, it doesn't make any sense where it stopped. Therefore, people thought, oh, it's going to keep going. Price is often misleading. That's our main message. But from a momentum perspective, it said, cool it. We're in a bull trend. This is a sharp pullback in a bull trend, and this bull trend is by no means time or price-wise over with.
So you think we're getting close, Michael, to a breakout here? Is it hard to say on the timing?
I would say that probably over the next week or two, we'll have a better sense we update every week, sometimes intra-week, in terms of numbers. We're toying with some numbers now this week at the highs today that if you can close the week out here, especially the month, that's next Monday, it looks like it's got its elbow up over the curb. Best way to define it. In other words, it got knocked down. It's now getting itself back up. Again, we don't expect a bottle rocket right away. The thing I'd look at more so right now is the euro. The dollar has really not had a big weighty influence on gold. Some people have noticed that. The dollar index, for example, in February was at 97. Well, gold was at 1050 late last year and ran up to 1370. Well, the dollar index basically went sideways with some oscillations. So it hasn't been a negative so much for gold, but if dollar flips back down, and I think it could, it's right now it's at the dollar index is 98.60s. close the day out at about 98.20, I think they're going down, and the euro's going up, in which case that could give some more wind to gold. Mm-hmm. And I still think that's one arena of the four asset categories, stocks, commodities, debt markets, and foreign exchange. That the foreign exchange arena, particularly the euro and the dollar, are the most sedate major markets in the world right now, and have been all year. And I think when they wake up, it's going to make some noise. And I think they could very well be about to. If the dollar will just roll over modestly and the euro uptick modestly, I think we could get that rolling. And that, I think, would put some wind at the back of gold.
Well, very interesting. And also, you've turned more bullish on commodities in general, and you track the Bloomberg Commodity Index, and I think that is also starting to look like it could be breaking out on the upside.
Well, there's several days left in the month, and it's much higher than it needs to be to have a breakout close. I wanted to see it close this month like 84.58, I think was my number. It's above 86 right now. And all it's got to do is just hang around, and this monthly close will, in my view, turn annual momentum of the commodity index, the whole basket, upside. And I think the consequence of that will be a rush, probably in the next 6 months, to the upside in commodities more broadly. So far this year, the strength has primarily been in gold, silver, and oil, and sugar. A lot of the food commodities have been either going down, or basing, and I think they're about to join in. And in other words, the back end of the crowd is about to wake up, and I think the grains and so forth could be quite stellar over the next year, and that could be the factor that helps blow the Bloomberg out of the hole.
Yeah. Michael, it's very interesting. We've had Don Cox on this show a couple of weeks ago, a very, very well-known analyst in Canada, and Don was talking really about about how he sees a lot of softness in the soft commodities because of oversupply. But I don't mention that simply because I want to have a discussion on that. We don't have time as much as I'd like. But the fact that fundamental analysts a lot of times see things a certain way, and then you also have the ability to look at things like that as well, but you're really allowing your technical work to guide you and tell you which way things are going, even though you might think they should go in another direction sometimes, right?
Well, my opinion on the fundamentals is that at the bottom it never looks good.
Yeah.
By nature, it can't look good.
You just feel like you never want to get into things again. Yeah.
Yeah. And so the supply-demand issues, as they measure them in various ways, will always look nasty at the bottom. And it's the first third of a three-wave bull market, for example, is almost always 90% caused by short covering or buyers who find that it's a vacuum. Why? Because the market is sold out. It's gone too excessive on the downside. So even if supply is negative in relation to demand, perhaps the price of that given commodity is just too low anyway, even given the negative fundamentals, so-called. Then there's the other factor, investor desire to allocate resources to an area they feel good about. And if something's bombed out, it doesn't hurt them anymore, and looks like it's turning, more and more people will move into it, and when they start to make money, their friends start to join in, and all of a sudden you've shifted investor preferences.
And that's when you get that whoosh moment that you like to call it sometimes.
Effect.
All right. Well, anyway, we'll have to let it go at that, Michael. Thank you so much for being with us again. Always a pleasure. Folks, it's olivermsa.com, olivermsa.com.